Earlier in the week, Bitcoin broke past $50,000, which a lot of enthusiasts, but also analysts and investors see as a key psychological
JP
level.
Morgan Jamie Dimon speaking out this afternoon at the Institute of International Finance, saying again that he thinks that crypto is quote unquote worthless.
I think that every company on earth is sitting on a balance sheet that's normally cash and credit. So with a few exceptions, everybody's holding some kind of US dollar or euro or the local fiat currency. And if they want an alternative to that, they're holding low risk debt, sovereign debt. And if they're really risky, they would be holding some other debt. But a lot of times it's sovereign debt. And so that's cash and credit. And the cash and credit are crumbling, right? They've always been crumbling, but now they're crumbling at a faster rate. In good times, they're crumbling at 7% a year. And in bad times, they're crumbling at 10 or 15 or 20% a year. And in horrific times, like if you're in Venezuela, Argentina, Lebanon, it's crumbling at 60 to 80% a year. And that's hyperinflation. So a year ago, we were staring at a balance sheet with $500 million of cash and credit, and it looked like it was almost certainly going to crumble at a rate of 15% a year for 4 years. And that drove us to discover Bitcoin. And then a light bulb went off, and I realized that we could swap out the entire amount for something better. And there are a lot of ways to view Bitcoin, right? You can view Bitcoin as digital property, digital money, or digital energy. And if you characterize it as digital property, it's like I bought a $500 billion block of property in cyberspace. And if you characterize it as digital money, I basically bought $500 million worth of a currency that nobody can print any more of. And if you characterize it as digital energy, what we did is took analog energy and we digitized it. And, if you had a megawatt of power and you sold that megawatt of power commercially at 11 cents a kilowatt hour, you'd have about $1 million worth of revenue. And if you took that megawatt of power and you mined Bitcoin with an S19 miner today, you'd have about $4 million of Bitcoin. But the difference is if I'm holding a megawatt of power as electrical energy, electricity, I'm going to lose 2%. How do you put it in a battery? Find me a battery that holds a megawatt of power. First of all, if you found one, it's got a 2% bleed rate a month or more. So you're going to lose 24% of your power in a year. The half-life of the power is at best 3 years. And if you move it, you have to move it on a power line. You can't move it more than 500 miles. You lose 6% of your energy at the end of the line. So your transaction fee is high if you move it, and your inflation rate is high if you hold it. And on the other hand, if you convert it to digital energy, you could hold it on the network forever for no power loss. Someone just moved $2 billion of Bitcoin at 78 cents, right? You guys saw that? So you could move it from here to Tokyo across a satellite connection for 78 cents. So again, no cost to move it, no cost to hold it, no constraints on the storing of it. The half-life is forever. Well, first, I just wanted an alternative to crumbling cash and crumbling credit. I just wanted the number not to go down. Most people don't think their number goes down when they're holding dollars, but once you understand the inflation rate, you realize your purchasing power is going down if you're not keeping up with the cost of capital. And so your wealth is being destroyed. So first, I just wanted the number not to go down. I wanted to preserve wealth. Then we realized that it was a high quality property. I think the epiphany comes when you realize that it's the dominant digital property network, and digital property is better than physical property in every way conceivable. If I theoretically designed digital property I want to store $1 billion. I want to hold it in the palm of my hand, move it at the speed of light, vibrate it 1,000,000 times a second. I want it to last forever. I want immortal, indestructible, infinite, all-powerful, programmable energy. Once you realize that Bitcoin is digital property or digital money or digital energy, then it becomes clear that everything else you could possibly own is inferior to that. So I look at Bitcoin and I think, well, it's a universal property. It'll last forever. It's very hard to seize. It's very hard to tax, because on the day you wake up and you find that it's illegal to own Bitcoin in your country, you can either take it with you to another country. Try taking $1 billion of gold to another country with you. Try taking $1 billion of building in another country. So you can either take it with you, or you can send it somewhere, or you can sell it. And so the ability to send it, to take it, or to keep it, or to sell it, all those are three rights that you sacrifice when you buy a house or a building or land or securities or credit or cash. You don't have those rights, or art or collectibles or sports teams, right? Whatever it is you think you have, you don't have property rights with those things. Nothing more stable, nothing more predictable in the entire financial universe than that. I think there's a very dynamic competitive market in Bitcoin mining on the security side of the network. And I think there's a very dynamic competitive market in Bitcoin and the exchanges. And I think there's a dynamic competitive market in the applications, so call them the banks or the financial application themselves. And all three of those are very Darwinian to the benefit of the network. So for example, if I take an S19 miner and 30 megawatts of energy, I can create an exahash. It took me 150 megawatts of energy to create an exahash with an S9 miner. I'm obsolete, and my the break-even point for the S19 is 40 cents, 45 cents a kilowatt hour. The break-even point for the S9 is 9 cents a kilowatt hour. The break-even point for the previous generation is 2 cents a kilowatt hour. What's happening is the Bitcoin mining network is upgrading its technology and squeezing off the grid all of the obsolete or the third generation, the older technology. If you can't upgrade, if you don't have the money to buy the new generation technology, you got to pay the price with energy. And at some point you need 50x as much energy. You can't afford to pay the price. You're getting squeezed out no matter what. The more options there are for Bitcoin securities, the better it is for Bitcoin. The more options there are for Bitcoin wallets and Bitcoin exchanges, the better it is for Bitcoin. And the more competition in Bitcoin mining, the better it is for Bitcoin. The more Bitcoin mining rig companies, the better it is for Bitcoin. Bitcoin wins no matter what happens. If you have a Bitcoin company, there's a 99% chance or a 99% failure rate for most corporations over a long enough period of time. There were hundreds and hundreds of companies that wanted to be Apple's iPhone. And how many companies wanted to be Instagram? And how many companies wanted to be Facebook? And how many companies wanted to be Amazon? For Amazon to win, 15,000 retailers have to lose. Competition is good for the underlying network. It'll be great for the protocol of Bitcoin. It'll be great for the asset value of Bitcoin. It's not good for the competitor.